Arbor Realty Trust stock, ticker symbol ABR. This stock is down almost 18% on the year-to-date chart, massively underperforming the S&P 500 that returned almost 6%. And on the 27th of October, ABR presented quarterly results where they beat on EPS and revenue. The upcoming earnings will be presented next week on the 16th of February. And people love ABR stock because of multiple reasons, and one of them being the dividend. And I understand why, with dividend yield at 14% and a great dividend growth track record. So could this be the perfect time to buy ABR stock? In this small update video before the earnings, I want to check how the company is doing lately. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ABR do? Arbor Realty Trust is a specialized real estate finance company. And this is very important. It is not a REIT but a finance company. It invests in a diversified portfolio of structured finance assets in the multifamily and commercial real estate markets. ABR is a 2.73 billion market cap company. PE ratio is at 7.4, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for ABR, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 729 million, and in this graph we see that revenue went up in the long run. Over a longer period of time, margins are pretty steady, I would say, except for the lockdown periods. So to me this looks pretty good, but keep in mind that ever since 2021 it is decreasing to pre-lockdown levels again. EPS is following the same pattern as the margins and revenue, nothing really special to be honest. Analysts expect big differences in EPS growth in the coming years, so this is really interesting. In 2024 they expect a decline of roughly 12%, while in 2025 they expect an increase of 4% again. For the revenue it is a pretty similar story, but it is looking a little bit better, I would say. Again, they expect a decline in 2024, but mid-single digit growth in 2025. Return on assets is sitting at 1.8%, which is a low number. Return on equity looks really good, and since this is a finance company, we don't focus on the ROIC. Current ratio is at 12, which is looking a bit too high in my opinion, so definitely keep an eye on this number. Right now, ABR has 12 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ABR has roughly 900 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run, but in general I would say it's going up. Shares outstanding are increasing, which is not a good thing, but companies like ABR increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 14%, which is an insane number. Annual payout is at $1.72 and payout ratio is at 78% and not the 95% displayed here. I prefer 50% or lower, so right now they have 22% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 11%, which is a great number, and they increased the dividends for 10 years in a row, which is also very nice. And if you take a look at these numbers, the dividends paid since 2012, you see that ABR did increase the dividends at a decent rate overall. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to grow at slightly lower growth numbers, which is still very nice.
Overall, these dividends look pretty good to me, but how about the historical returns?
I decided to compare ABR stock with the overall market, in this case the S&P 500. On the 5-year chart we see that ABR underperforms the S&P 500 by a decent amount. In total, ABR returned 68% including dividends, versus the S&P 500 sitting at 101%. The interesting part here is that ABR was capable of crushing the S&P 500 a few times, but always went down only short after doing that. On the 1-year chart it looks pretty different, with the S&P 500 returning 25%, while ABR is having a minus 3.75% return. On the 6-month chart it is again the S&P 500 that is beating ABR, with significant numbers. In total, the S&P 500 returned 13%, while ABR is at minus 20%, and keep in mind this is including dividends. On the 1-month chart we see that the S&P 500 was again the better choice, with almost 6% return, while ABR is sitting at minus 16%. So bottom line, the S&P 500 beats ABR in both the long run and the short run. So could this be the perfect time to buy ABR stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analyst. For the profit margin I'm filling in 46, 48 and 50%. And for the free cash flow margin I'm putting in 54, 56 and 58%. For the PE ratio and the price to free cash flow I'm putting in 6, 7 and 8. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want a higher margin of safety with this company. Right now ABR stock is at $12.33. I hit analyze, and we only see green numbers. We have a low price target of $13 to $15.6, we have a mid price target of $16.4 to $19, and we have a high price target of $20 to $23.6. To me, the low to mid price target is the most justified here, indicating this stock is undervalued.
So my final conclusion is that I love ABR. It is currently in my portfolio, and the main reason being the dividend. Since it is a high risk, high return company in my opinion, I'm trying to keep them under 5% of my total investments within my portfolio. I really love the focus on multi-family homes, and they have some great times ahead in my opinion, with that niche focus. Most fundamentals look good and they are performing strong and steady. However, I do think that in the coming years growth will slow down a little bit. Dividends also look really good with 12% dividend yield and 78% payout ratio. On top of that, they keep increasing the dividend yield. From a valuation point of view, things also look really good, even with the low price target. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.